what is a put option and how do we use them in the funds? Very simply put, a put option is really like an insurance policy. So if you think of the insurance you have on your house or your car or your medical insurance, you pay away a premium, a small value of whatever it is that you're insuring. And should that negative event take place, you can obviously claim against that policy. So a put option is very similar just for investments. What it means is that we pay away a premium to protect the funds against a fall in markets. And the nice thing about using put options is, number one, they're very quick to execute, so you can put them in place very quickly if you think there's a negative event on the horizon. But secondly, if that negative event doesn't happen, so maybe you're expecting something bad, it doesn't play out that way, you haven't locked in that exposure. It's an option. So you are allowed to execute on it if the negative event takes place. And if it doesn't, what happens is that option expires and all you've lost is the premium you've paid on it. Whereas the other way of expressing that, a similar view, which is significantly more costly, would be to actually physically sell all the investments in the portfolio that are exposed to whatever risk it is you're trying to protect against. There, obviously, you have trading costs involved. And secondly, if you're wrong and that risk event doesn't come to pass, you have a significant chance of underperforming the market, because you now have to change your mind, get back in, and you've probably missed out on some valuable upside. What I have for you here is a chart of an event where this took place. You can see the market fell quite significantly over a short period of time. Because the funds had that put protection in place, we were able to protect our investor capital and not really suffer that drawdown. So it is a very nice way for hedge funds to protect investors from market fall downs. It's something that we've used repeatedly throughout our career at Peregrine Capital. So here what I've got on this slide for you is just a couple of the major pullbacks in markets. So things like the global financial crisis, Nene Gates, COVID-19, the start of the Russia-Ukraine war, and obviously most recently the Trump tariffs. And I think what you can see from this slide hopefully is that the put protection is a very useful way of protecting investors against those drawdowns, making sure that the ride is significantly smoother without giving away too much of the upside.